Hello, good morning. Yes. Hello, Mr. Musa, Mr. Andrew. Hello, can you hear me? Andrew, Mr. Andrew, Mr. Andrew. Hello, good morning, everyone. Hello, please can you mute your device and talk to the mic? Let me know whether we are all fine.
Good afternoon, sir.
So good afternoon, everyone. Good afternoon. So I've been using style to wait for everyone. So let's start the class in the next 5 minutes. Thank you so much. In the next 5 minutes. Okay, good afternoon, everyone. Can you confirm you can hear me now? Hello? Can somebody confirm he or she can hear me? Hello?
Yes, you are audible.
Hello?
Can hear you.
Okay,
Good
thank you so
afternoon,
much.
sir.
Good afternoon, sir. Good afternoon. So I'm Said. So I'm the one that will be taking today's class. So today's
Okay, that's
topic is IAS 16, property, plant, and equipment. Okay, so I will be sharing my screen shortly, and let me know when you can see my screen. Let me know when the screen is up.
okay. It's visual. It's up.
Okay, thank you so much. Good afternoon once again. So today's topic is IAS 16, property, plants, and equipment. So what are those things that we need to know concerning this topic? The definition of a PPE, the recognition criteria, the measurements, which can be broken down into initial measurements and subsequent measurements, the recognition of PPE in the financial statement, and the disclosure requirements as prescribed by IAS 16. So when we say PPE, what does that mean? PPE is a tangible asset that are held for use in production or in supply of goods or services, or for rental to others, or for administrative purposes, and which are expected to be used during more than one accounting period. So based on this definition, by default, PPE must be a non-current asset. And PPE must be a tangible asset and can be used either for production, rendering of service, administrative purpose, or rental to others. So we have different classes of PPE. Land and building is a class of PPE. Motor vehicle is a class of PPE. Furniture and fittings is a class of PPE. Office equipment is a class of PPE. Biological asset is a class of PPE, which I will explain as we move on. I don't know whether anybody has any question before I proceed. Do we have any question based on my explanation, or I can proceed? Hello, guys.
You can proceed, sir.
Hello. Thank you so much. The recognition criteria for PPE is saying at what point will I recognize an asset in my financial statement? And I call it property, plant, and equipment. So we call that recognition criteria. And based on the standard, before I can recognize an asset as a PPE, the following criteria must be met. Number one, it must be probable that future economic benefit will flow to the entity. And number two, the cost of the asset must be measured reliably. Future economic benefit can be seen from two perspectives. It can be income generation, or it can also be cost savings. So these are the various ways that an asset can give economic benefits, either cost savings or income generation. By default, a PPE must be a non-current asset. So measurement of a PPE can be broken down into two. We have initial measurement, which implies value that I need to associate with my PPE on day one. Initial measurement means value on day one. At the same time, we have subsequent measurements, which means value going forward. Subsequent measurements can be value in 2 years' time, value in 1 year time, value in 50 years' time, and so on and so forth. So for the initial measurement, PPE must be measured initially at cost. Cost incurred to acquire the PPE, or probably cost incurred to construct the PPE, because PPE can be acquired in 2 different ways. It's either I buy the assets in the market or I construct the assets myself. So what are the likely breakdown of the cost of a PPE? We have the purchase price, which include import duties and any other non-refundable taxes. If there is any discount, which is trade discount or rebate, they are expected to be subtracted from this. Any other cost incurred in bringing the asset into working condition needs to be added. Capital costs, such as cost of site preparation and any other initial delivery and handling costs, will also be added as well. The cost of installing the assets and assembling the assets will be added. If there is any professional fee incurred for the purpose of acquiring the assets, it needs to also be capitalized. That's what we call decommissioning cost or dismantling cost, which is the cost an entity will incur in future to dismantle an asset and restore the location to its original state. That cost, based on the principle in IAS 37, the standard requires that an entity should estimate the value, the cost it will incur in future to remove the asset, and discount the present value. So the present value, the discounted value, is what we're expected to add here. If the asset is an asset that is being constructed, any other relevant costs, such as cost of material, direct material, cost of direct labor, cost of any other direct expenses, are all to be capitalized. This standard prohibits capitalization of abnormal costs, such as cost of damaged material or labor that is in form of a waste, or faulty design, or any other cost that is incurred during the stoppage time. Those costs are not expected to be capitalized, but they are expected to be expensed in the profit or loss. I don't know whether we have any question or I can proceed. Hello, can I move on?
You can move on, sir.
Okay, sir. Subsequent measurement is just the value for my assets going forward. Subsequent measurement, there is a choice. I can use cost model, or I can use a revaluation model. Under the cost model, the carrying value of this asset is historical cost minus accumulated depreciation minus accumulated impairment loss. For the revaluation model, I revalue the asset. Revaluing the asset means I determine the market value of the asset, and based on the new market value that I've determined, I'm expected to determine revaluation surplus or revaluation deficit. Revaluation deficit is expected to be recognized in profit or loss, except when it reverses previously accumulated revaluation surpluses. While revaluation surplus will be recognized in other comprehensive income, except when it reverses previously recognized revaluation deficits. In IAS 16, there are principles that needs to be followed. At any point in time, an entity opts for revaluation model. The first principle is saying revaluation should be made with sufficient regularity, because the standard, which is IAS 16, does not specifically mention to us how often we're expected to determine the fair value, which is the market value. But the standard is saying an entity is expected to adopt a frequency for the purpose of this revaluation. Whichever frequency is to be adopted, the carrying value of the asset must not be materially different from the fair value, which means I can be revaluing my asset every 4 years. I can be doing every 3 years. I can be doing every 5 years. Whichever frequency I have adopted, what I'm currently carrying in my financial statement must not be materially different from the market value. The second principle is saying once revaluation model is adopted, the entire class of assets are to be revalued. That means the standard does not allow what we call selective revaluation. What is selective revaluation? I can have 10 properties across Lagos. Selective revaluation is now saying, out of these 10 properties, I want to only revalue 4. The other 6, I don't want to revalue them. This is selective revaluation. The standard front at that. So based on this standard, once a revaluation model is adopted, all the assets within that class are to be revalued. So if I revalue my assets, I restate the asset from cost to the market value. I eliminate any accumulated depreciation, and I increase the carrying value of the asset in the revaluation reserve. That's what the standard is saying. So revaluation reserve is a reserve that we use to accumulate revaluation surplus. And that reserve is sitting in equity. I don't know if you have any question for me. I don't know if you can proceed from here. Okay. Can someone read this slide I'm presenting now? Can someone read the slide for me? Hello, are we here?
Yeah. Initially, revaluation gains are reported as part of a component of other comprehensive income and accumulated in equity under the ending of revaluation surplus. Revaluation losses are recognized in the income statement. Subsequently, revaluation gains should be reported as part of component of other comprehensive income as above, unless it reverses earlier decreased charge in income statement. Revaluation losses shall be recognized in the income statement as above, unless it reverses earlier increased credited to revaluation surplus.
Okay. So let me now explain this. Sometimes we call it revaluation gain. Some people call it revaluation surplus. Whichever one we call it, both are the same. Revaluation gain or revaluation surplus is to be recognized in other comprehensive income. That's where I recognize it. So what's the accounting entry? I debit the assets, I credit other comprehensive income. However, if there had been a deficit in the past and I'm having a surplus now, that surplus I'm having will be recognized in profit or loss with the primary objective to reduce any deficits that I've recognized previously. That's the principle. And revaluation deficits I also should be recognized in profit or loss, except when in the past I have recognized a revaluation surplus in OCI and I'm having a revaluation deficit now. And that surplus I'm having, which means ideally should have been recognized in OCI. But given the fact that I've recognized a deficit before now in profit or loss, that surplus will be recognized in profit or loss with an intention to reduce any deficit that I've recognized previously. That is a principle here. I believe it makes sense. I believe I can move on.
No, please
Okay.
repeat that statement again.
Okay, so which one?
The one that you just ended up. When
Okay.
we have a surplus in the OCI, then we have a subsequent deficit. How to nearly love? Is it not when you credited surplus before, then we now have deficit? Are we not going to debit the same surplus account instead of crediting it?
No. See, there's a principle that says I can't keep surplus and deficit simultaneously. So if I have a surplus now, what do? I debit an asset, I credit other comprehensive income, which you call OCI, other comprehensive income. If later I'm having a deficit ideally should be recognized in profit or loss and not OCI. But just because I have recognized a surplus before now in OCI and I'm having a deficit now, that deficit should be recognized in OCI with an intention to reduce the surplus I've recognized previously. Because I can't keep the two I can't keep the two simultaneously.
So instead of debiting profit or loss, we are going to debit OCI because we have
Correct.
yes, okay.
Correct.
Yeah,
Correct.
that's to come.
Correct.
Thank you.
Correct. That makes sense. Correct. If I revalue an asset, I will still depreciate the assets. But the principle is the depreciation will be done based on the remaining useful lives. For example, an asset has a useful life of 10 years, but the asset was revalued at the end of year 2. If I revalue the asset at the end of year 2, and the normal useful life is 12 years, that means the remaining years will be 10. If I have to depreciate that asset, I would depreciate that asset based on the remaining useful life, which is 10, and not the original useful life of 12. If I depreciate, that depreciation will be recognized in profit or loss as an expense, except when it is permitted by another standard to be recognized as an asset, for example, inventory. And the objective is that I debit profit or loss and I credit the asset because depreciation is expected to reduce the carrying value of the asset. So that revaluation reserves that are recognized in OCI I will move it to a reserve called revaluation reserve. That figure does not go to profit or loss. It goes to OCI. And from OCI, it doesn't go to retained earnings. It goes to a separate reserve. And that separate reserve, we call it revaluation reserve. So that's the principle. So before I proceed, I would like to ask you a question. Who can tell me the meaning of depreciation? When we say depreciation, what does it mean? Depreciation means what? What's the meaning of depreciation? Hello, are we there?
Yeah.
So what does it mean when we say depreciation?
It's a gradual reduction in the value of an intangible asset or an impairment or a tangible asset.
Okay. Any other opinion from any other person? What about the others? How many are we in this class?
You are no more than 4, including you.
Okay. What about Kemi? 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 Is Kemi here? Ah, Kemi left too.
Hmm. Can we carry on, please?
Okay. When we say depreciation is not.
The screen is not showing again.
Is that what? Okay. Okay.
The screen
Let
is
me
not
go back.
showing.
No problem. You can start showing now. Depreciation is not just reduction in value of an asset. Depreciation is a systematic allocation of depreciable amounts of an asset over its estimated useful lives. We call that depreciation. Systematic allocation, I repeat, systematic allocation of depreciable amount of an asset over its estimated useful lives. So why do I depreciate an asset? I depreciate an asset because of matching concept. And what does that mean? This is an asset I have used to generate economic benefit. Using it to generate economic benefit is consumption. The consumption should also be recognized as an expense. So depreciation is not because an asset reduces in economic value. It's not because of wear and tear. It's not because of passage of time. It's not because of obsolescence of an asset. Depreciation is just a systematic allocation of depreciable amounts of an asset over its estimated useful life. That is depreciation. So why do I depreciate? To comply with matching concepts. At what point do I commence to depreciate an asset? I commence depreciation when an asset is available for use. Available for use as intended by the management. At what point will I stop to depreciate? I stop to depreciate an asset at the earlier date of when an asset is classified as held for sale or when an asset is recognized in the financial statement. I don't know if you have any question for me based on this. I don't know if you have any question for me. Hello, are you with me?
Yeah, please. Right.
Okay. Depreciation is an accounting estimate. Accounting estimates can change based on a principle in IAS 8. In IAS 8, when there is a changes in accounting estimates, the standard requires that that changes should be applied prospectively. Based on the fact that it's an accounting estimate, the method should be reviewed on an annual basis. Reviewing it on an annual basis may result in a change. So, changing it will lead to the principle in IAS 8 that says when you change your accounting estimate, you apply it prospectively. Prospective application means you apply that change going forward without tampering with whatever you've done in the past. So take note, changes in depreciation method is not a change in accounting policy, but rather it is a change in accounting estimate. Okay. Can you see this question? Hello?
Yes.
Okay, I want you to solve this question as classwork. I'll give you 3 minutes to do that. So I'll mute my device in 3 minutes time. We come and debrief. I will continue sharing my screen. I will just mute my device. Ruth. Hello, Ruth. Ruth. Can you mute your device and talk? So I will take it back to the question now. Please, in the next 3 minutes, we debrief. You explain what you've done to me. So I'm muting my device now. While I go back to that question. Thanks. Hello? So can you tell me what you've done? Idowu? 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 So Mr. Bello, can you tell me what you've done? Mr. Bello? Are you still here? Mr. Bello? Mr. Bello? Can anybody hear me? Can anybody hear me? Hello? Hello?
Sorry. Yeah, I'm here.
Okay. So can you tell me what you've done? Idowu, can you mute your device as well? I want this class to be interactive for. So you can also talk, Idowu. Oh yeah, so Mr. Bello, so you can go ahead.
Okay, so what I just did here is I depreciated the $30,000 over the 12 period. Then that's 2 years and some months for thirty
That's some
thousand
month
dollars.
is how many? Oh yeah, wait. That's some month is how many months?
Okay, so that's some months is from January to March. That's 3 months.
Okay,
2 years and 3 months.
making sense.
Then the amount was revalued from, so the total around. So I just just the narrative answer. So the amount will be minus, if you less the $30,000 from the 2 years and 3 months, then the balance will be revalued to 32,000 naira. Then the 32,000 naira now, which is a revalued amount, is going to be depreciated over 9.5, 9 and 7 months, 9 years, 7 months.
Is it 7 months? If the other one is 3 months, the balance will not be
Oh no,
7 months.
sorry, 9 months, 9 months. Sorry,
Okay.
9 years, 9 months. And so what will be noted in the financial statement now is the current amount, which is new revalue amount at 2,000, will be showing on non-current asset. Then the new depreciated amount on 9 years, 9 months in financial statement.
Okay. So what
And
about the
corrected.
revaluation? Revaluation gain or revaluation
So
loss?
revaluation gain going to be posted
Hmm.
to revaluation surplus, OCI, under the OCI.
Okay. So what about in the balance sheet? Where will it go to in the balance sheet?
Go to revaluation reserve.
Okay. And the valuation reserve is presented where in the balance sheet? Where is it presented? The equity part of the balance sheet. I don't know whether that makes sense to you.
I didn't hear that. Yeah, come again.
The valuation reserve is presented in the equity part of the balance sheet. Does that make sense?
Yeah, yeah, of course, equity part.
Okay. Another question. Yeah, you've actually tried. So just like what you said, before before evaluation, I will have depreciated for 3 months, and I will determine the carrying value. So after evaluation, 9 months is remaining for that particular year, and I will determine revaluation surplus or revaluation deficits. It's usually being computed by comparing the revalued amounts with a carrying value before revaluation. So when the revalued amount is more than the carrying value before revaluation, what it will give us will be a revaluation surplus. The other way around, give us a revaluation deficit. And just like what we've established in the past, revaluation surplus is recognized in other comprehensive income, except when it reverses previously recognized revaluation deficits. Okay. So can I move ahead? That's what we call componentization. Componentization is a method or an approach that is being used to depreciate a composite asset in a manner that, for the purpose of depreciation, we are going to identify the various components of the assets and we depreciate each of these components separately. We call that approach componentization. This approach is usually applicable to composite assets. Composite assets like an aircraft, composite assets like a train, a building like skyscrapers, and so on and so forth. So what the principle is saying is that we identify the various components of the assets. Each of these components, we have different useful lives, and we depreciate them separately. Given the fact that we have different useful life and we have different costs attributable to them, we are going to depreciate them separately. And the total depreciation is what gives us the depreciation to be charged to profit or loss. So we call this approach componentization. Subsequent expenditure I incur on an asset like PPE is like expenditure I incur after day one, which can be three years after day one, 5 years, 10 years, 50 years. The question is, after I must have acquired an asset or have constructed an asset and I incur costs, the cost I incur, how should I account for it? Should I recognize it in profit or loss? Or should I capitalize it as part of the cost of the assets? So the standard is saying capitalize it as part of the cost of an asset whenever it can do one of these two. Number one, if it can prolong the useful life of the assets, or number two, if it can enhance the economic performance of the assets, are capitalized. Any of those two. Otherwise, that cost should be recognized as expense in the profit or loss. For the derecognition, when I say derecognition, what does that mean? It means removing an asset from the financial statement. We call it derecognition. So the question is, what could warrant an asset to be removed from the financial statement? And the principle is saying, derecognize an asset if, number one, the asset has been disposed, or number two, no future economic benefits can be derived from the continuous use of the assets. We recognize our assets. And the recognition means taking it away from the financial statement. Those are the two instances when an asset that is categorized as a PPE can be taken off the books. Disclosure requirements are those information which can be quantitative or qualitative that are expected to be reflected as part of the note to the financial statement in order to enhance the understanding of the users, and also provide adequate information, reliable information for the user for the financial statement to take decision. So please, can somebody read this disclosure? Can someone read this disclosure? Hello, who is there to read it for us? Hello. Hello. Ibukunluwa. Ibukunluwa. Can you unmute your mic? Ikem, can you also unmute your mic? God's power. God's power. Are you here? Hello. Can anybody hear me?
Yeah, they are audible.
Okay.
I don't think
I'm
they are
wondering why.
active. They just
You said what?
I don't think they are active. Maybe they just join and left it like that.
Okay. Okay. So let's go through the disclosure requirements together.
Okay, yeah. Before you go to that, I have a question based on the
Okay.
evaluation surplus and the visit. For
Okay.
instance,
So what?
if a deficit, an outstanding deficit in a P&L, and they now revalue to the subsequent evaluation now become to be surplus instead of
Mm-hmm.
putting it to OCI, you have to nail it off from the deficit, right?
Yeah.
Deficit
Yeah. Yeah.
P&L.
Yeah.
Okay, so I'll move on.
Okay. So let's go through the disclosure together. So can you read it out for us?
Okay, so disclosure. The financial statement shall be disclosed for each class of property, plant, and equipment. A. The measurement basis used for determining the gross carrying amount. B. The depreciation method used. C. The useful lives or the depreciation rate used. The gross carrying amount and the accumulated depreciation aggregated with accumulated impairment losses at the beginning and end of the period, and reconciliation of the carrying amount at the beginning and end of the period showing additions, disposals, increases or decreases resulting from revaluations and from impairment losses, depreciation and other charges. If items of PPE are stated at revalued amount, information on this should also be disclosed.
Okay. Do you have any question based on the disclosure requirements? Any question?
Not really.
Okay. So there are some questions that we have to solve, and some I'm giving you as classwork. Okay. Let's solve this one together. This is question number 2. Can you read it out?
On 1st October 2012, Omega purchased some land for $10 million, including legal costs of $1 million, in order to construct a new factory. Construction work commenced on 1st November 2012. Omega incurred the following costs in connection with its construction: preparation and leveling of the land, $300, purchase of materials for the construction, $6.8 million, employment costs of the construction workers, $200,000 per month, overhead costs incurred directly on the construction of the factory, $100,000 per month, ongoing overhead costs allocated to the construction project using Omega's normal overhead allocation model, $50,000 per month, income received during the temporary use of the factory premises as a car park during the construction period, $50,000 per month. Cost of educating employees to work at the new factory, $300,000 per month. Okay, $300,000. Cost of the opening ceremony on 31st July 2013, $150,000. The factory was completed on 31st May 2013, and production began on the 1st of August 2013. The overall useful life of the factory building was estimated at 40 years from the date of the completion. However, it is estimated that the roof will need to be replaced 20 years after the date of completion, and that the cost of replacing the roof at current prices will be 30% of the total cost of the building. At the end of the 40 years period, Omega has a legally enforceable obligation to demolish the factory and restore the site to its original condition. The directors estimate that to demolish the factory, the directors estimate that the cost of the demolition in 40 years' time, based on prices prevailing at that time, will be $20 million. An annual rate adjustment discount rate, which is appropriate to this project, is 8%. The present value of $1 payable in 40 years' time, an annual discount rate of 8% is 4 to 6 cents. The construction of the factory was partly financed by a loan of $17.5 million taken out on 1st of October 2012. The loan was an annual rate of interest of 6%. During the period of 1st October 2012 to 28 February 2013, when the loan proceeds had been fully utilized to finance the construction, Omega received investment income of $100,000 on the temporary investment of the proceeds. Compute the carrying amount of the factory in the statement of financial position of Omega 30 September 2013. You should explain your treatment of all amounts required in this part in your answer.
Thank you so much. Okay, let me do something. So, what are the principles you think the examiner is trying to test based on this question? Are you there? Hello?
Hello? I can hear you.
Yeah, I was asking, what are the different principles you think the examiner is trying to ask or test in this question? I'm listening. Question.
Yeah, we have surplus, we have demolitions, we have depreciation, we have cost model, we have
Position of initial cost of the factory. And the max. $1.50. If you have any question, let me know. So the first one here, based on the question. So based on this question, how much are we recognizing as the cost of the land? How much is the cost of the land based on this question?
Land is $300, $300,000.
Land, check very well. Land. Can you see my screen?
$10 million, $10 million
Okay,
dollars.
million.
10 million. The other question I would like to ask you is this 1 million, which is a legal cost, can we say it has been included in the 10 million
Yes,
or not?
to be there.
Yeah, yes, that be included.
Okay, correct. So cost of land. 10, 1, 2, 3. This should be capitalized. Do you agree? This should form part of the costs of the factory. Preparation and labeling of land. Are we to capitalize or we are to expense?
Capitalize
How much?
$300. $300,000.
Okay. Cost of preparation and labeling of land. $300. This should be capitalized as part of the cost of the factory. Purchase of material for construction, should it be capitalized or should not be capitalized? Are we there? Purchase of material for construction, should it be capitalized or it should not be capitalized?
It should not be capitalized.
Hello? Eh?
It should not be capitalized.
Why do you say so?
Because it's for purchases now. Purchases are not capitalized. They are
Wait. Let me ask you a question. What am I actually purchasing?
materials for construction. Okay. For the construction of the land.
Should it be capitalized or should not be capitalized?
Okay, should be capitalized.
Are you fine?
Yes.
Are you sure you're fine?
Yes, I'm fine.
Okay. Materials for construction. That is 6.08 million. Okay. That is 6080. The next one, employment cost of the factory workers.
It should be capitalized.
Okay, they now say for that, they now say this 200 is per month. So for how many months will I capitalize?
12 months.
How many months?
Wait, sorry. I said the commenced in November.
Hmm.
12 months now.
Check very well. Check very well. If you want me to scroll, I can scroll for you.
Hold on. Let me read. November. Okay, 7 months. From November to
So, eh?
from from November 1st to 31st of
June.
May 2013.
Okay. Why are you handing it in May?
Because they said the factory was completed on 31st May 2013. But they
Correct.
said and production began on 1st of August 2013.
Mm-hmm.
So
Mm-hmm.
did it stop and continue again?
Hmm?
So did they stop and continue again?
No, the production. Remember, what am I constructing? It's a factory. Do you agree?
Actually, yes.
The production they are referring to is the production in the factory. Oh.
Yes, I know that.
Uh-huh. Are we fine?
Yes, I'm good.
That is 200 times 7. Does that make sense to you?
Yes, it makes sense.
Okay. The next one.
Uh-huh.
Provide costs incurred directly. Capitalized or not capitalized?
Capitalized.
Okay.
David, can I ask a question?
Right, man.
What are we capitalizing and what are we not capitalizing? Because I didn't join at the beginning of the class.
Okay. So we are capitalizing costs that are directly attributable to an asset,
Okay. So in the
which
course
implies, which
directly.
implies if I've never incurred those costs, there wouldn't be any construction.
Okay, I get it.
Or do you have any further questions?
No. I can play with that.
Okay. Provide costs directly incurred. So this one is 100 per month. That's 100 times 7. Do you agree?
7 is that's 700. Mm-hmm.
Ongoing overhead costs allocated to the construction project. Capitalized or not capitalized?
Capitalized
So why?
because it's an ongoing overhead cost. Like it was used during the course of the business.
Are you sure?
Yes, ongoing overhead cost.
Read it to the end. Oh, yeah, read it to the end.
Okay, ongoing overhead cost allocated to the construction project using Omega's normal overhead allocation model.
So capitalized or not capitalized?
Capitalized.
It is not capitalized.
Okay.
It's not actually
The answer is
specific to the
yeah,
to the project. It's normal,
yeah,
even aside from the construction of the fixed asset, it's normal overhead cost that it used.
yeah.
Okay,
The answer is yeah, the answer is not capitalized. It's correct. Are you fine?
so please why are we not going to capitalize it?
Oh, yeah. Read the one before this one.
Ongoing overhead cost allocated to the
Read the one before that. Read the one before that.
overhead costs incurred directly on the construction of the factory.
Okay. Can you tell me the difference between both of them?
One is ongoing, one has gone. I mean, one has been incurred. Why the other one is
No,
ongoing?
no, no,
No, no, no,
no.
no, no. The difference between them is,
See,
you see, the first one, we have overhead cost incurred directly. That one is
very
directly to
good.
the, while the other
Project
one is normal
allocated.
overhead,
Yeah, is it normal? Yeah, they now
normal one.
allocated it. See, there's a principle that says overhead that you capitalize are the one you incur directly, not the one you allocate using any other formula. Does that make sense?
Yes.
No, ask me a question if it doesn't make sense to you.
No, it makes sense now.
Okay. Ongoing overhead allocated. Zero. This should not capitalize. Number 7. Income received during the temporary use of the factory premises as car park, 50,000. Capitalized by adding or subtract it from the cost of the factory. Which one? Are we there?
Yes.
This one, are we adding it to the cost of the factory? Or are we subtracting it from the cost of the factory? Or are we ignoring it?
We adding.
Hmm?
Addition.
You say what?
Addition.
Why do you say addition?
Because it's an income.
Remember, what we are determining is the cost.
Okay. It should be subtracted from the from this because it's
So
an
why do you say subtracted?
incomes are meant to be subtracted now.
Okay, but not all income. In
No,
this case, we are to ignore it. In this case, why are we to ignore it? We are to ignore it because the income has nothing to do directly with the construction. Ask me a question if you have any.
I can't.
Huh?
I thought I don't have any question.
Are you sure?
Yes. So I thought I was going to subtract it from here. Like am I not going to subtract it from this
No,
place?
it's not coming here.
Okay.
It has nothing to do with construction. Yeah. The one coming here, either addition or subtraction, are the one that has something to do directly with construction.
Okay.
Are you fine?
Yes, sir.
Okay. The next one. Cost for relocating employee to work at a new factory. Are we bringing it there or we don't need it?
We need it. It's related to the factory.
How? How is it, how is it
It's
related?
like cost now.
Eh?
It's like transportation cost of
Uh,
relocation.
so so the
It's,
question is transportation
it's
cost. How does it affect constructing a factory?
even okay. It's indirectly. It affects it indirectly. So we're going to recognize. So we're not going to recognize it.
Yeah. So cost of relocating employees. How much? 300. So cost.
So it's going to be in the profit or loss, Abby.
Correct.
Okay.
Correct. Relocating
Relocating.
employees. I put 0 here. The cost of how much? 300. 300.
300. 300,000.
The cost of 300,000 is to be recognized as expense in the profit or loss. Sure. Cost of opening ceremony. Do we need it here?
No.
Why?
Because it's not affecting me directly.
Correct. Descriptive. The expense is the profit or loss. So 150. Okay. Can you read from the factory? Can you read for us from the factory? Blah blah blah.
The factory was completed on 31st May 2013 and production began on 1st of August 2013. The overall useful life of the factory building was estimated at 40 years from the date of completion. However, it is estimated that the roof will need to be replaced 20 years after the date of completion, and that is the cost of replacing the cost at current prices would be at 30% of the total cost of the building. At the end of the 40 years period, Omega has a really sorry. At the end of the 40-year period, Omega has a legally enforceable obligation to demolish the factory and restore the site to its original condition. The directors estimated that please scroll up.
Okay.
The directors estimated that the cost of demolition in 40 years' time, based on prices prevailing to this project, is 8%. The present value of the $1 payable in 40 years' time at an annual discount rate of 8% is 4 to 6 cents. The construction of the factory was partly financed by a loan of 17.5 million taken out on the 1st of October 2012. The loan was at an annual rate of interest of 6%. During the period 1st of October 2012 to 28th 2012, the loan sorry during the period 1st of October 2012 to 28th of February 2013, when the loan proceeds had been fully utilized to finance the construction, Omega received investment income of $100,000 on the temporary investment on the proceeds required.
Okay. So let's go back to the question. What else do I need now? There's an information based on what you read that speaks to dismantling cost. So I
Exactly.
come here. Number 10. Dismantling cost. That dismantling cost. How much is that dismantling cost? 20 million.
Okay, 17.
And I need to
28.
discount it to present value 4.6. So I will say 20 multi 21, 2, 3 multiplied by 4.6 divided by 100. Please ask me a question if you have any. Hello?
Yes, I'm with you. The employment value is 4.6 cents. So the
Yeah.
cent
The
percentage.
cent, the cent is, yeah, is 100, 100 cents makes $1. The
Is
same thing
one.
like 100 kobo makes 1 naira. So
Okay.
if I want to convert 4.6 cents to dollar, I need to divide it by 100. I don't know if that makes sense to you.
Yeah, it makes.
The present value of the decommissioning or the decommissioning or call it dismantling cost is expected to be capitalized as part of the cost for the factory. Number 11. There's something also read there that speaks to borrowing costs. So they eventually borrow 17.5 and the interest rate is 16%. So I come here, borrowing costs, borrowing costs. So that is 17.5 million times what's the interest rate? 6% times 6% times in IAS 23. The standard says commence capitalization when three criteria are met, which are number one, expenditure has been incurred, number two, borrowing cost has been incurred, number three, activity necessary to make the asset ready for intended use as commenced. So the borrowing was taken in October and the construction was completed in I think I saw May. In
Yeah,
May. October to May. How many months is that?
that's 8 months.
So times 8 divided by 7. Ask me any question if you have any. So I will say 17,500 times 6% times 8 divided by 3. IAS 23 requires that borrowing costs will be capitalized on qualifying assets. On qualifying assets. Sure. I saw something on investment income. 100,000. Okay. The investment income. Hundred. Investment income is to be used to reduce the borrowing cost eligible for capitalization. So, I don't know whether you have any question. Hello.
Yes, sir. I don't have any question.
Okay. What about others? What about others? Ibukunluwa, I've not heard your voice this morning. No,
I'm talking.
you are the one talking. Okay. What about Kemi? Kemi, Kemi Anakombi.
Sir,
Kemi,
sir,
I've not heard your voice in the morning, ma. Hope you're
just
understanding the press. Eh?
yes, yes, sir.
Yeah, just what? Tell me what happened.
Nothing, sir.
Are you sure?
Yes, sir.
Okay, Akombi, I've not heard his voice, so his or her voice. Fortunately, we share the same surname. Shadrach, Shadrach, good afternoon, sir. Hello. Okay, this
Let
total
me,
cost.
sorry, I'm not.
You said what?
Okay, now I'm off. You didn't, you muted me before.
Okay, okay. So there is an information based on this question that speaks to what we call componentization. So let me go back to that, please. This one is saying the factory was completed in May 31st. Production began August 1. If I want to start to depreciate the assets, will I start to depreciate in May or I will start to depreciate in August? Which one? Hello. If I want to start to depreciate the asset, when will I start to depreciate? May or August?
August.
Can you tell me why August?
That was when the production began, as the
Okay.
operation
In
began.
based on the standard, we start to depreciate
Yes,
when the asset is available for use.
yes.
And based on this question, the asset is available for use when construction is completed. I don't know whether that makes sense to you. I don't know whether you have any question. So that means I will start in May and not in
August.
August, and not in August.
Yeah.
Okay, sir. But the question said the factory was completed on 31st of May and production began August.
Yeah. That means I will start to depreciate 1st of June. That's the meaning.
Why 1st of June, sir?
Because if factory was completed in May, last day of May, that means the first day in June is when the factory is available to be used, even though this company did not use it until August.
Okay, sir.
Are you fine?
Yes, sir. Thank you, sir.
Okay. Are we all fine? Okay. So the cost of the roof is 30%, or the cost of the building. So I will say the component of the factory, are number one, the land. Their costs 10 million. Number two, the building, which is broken down into A, the roof, which is 30%, multiplied by 10 million, which is giving 3 million. And B, the rest, which is automatically 70% of 10 million, which will give me 7 million. Everything still sum up to give me the same 20 million. Remember, land is not depreciable. That means I will not depreciate it. The roof is to be depreciated over, based on this question, how many years? The roof, 20 years. Based on this question is 20 years. Over 20 years. Why the rest? The rest is to be depreciated over 40 years. So depreciation now, depreciation. For the roof, that will be 3 million divided by 20 years, multiplied by June, July, August, September, 4 months, divided by 12. Please ask me a question if you have any. That will be 3 million. That will be 3 million. Sorry. That will be 3 million divided by 20. multiply by 4 divided by 12. The rest will be 7 million divided by 40 years multiplied by 4 divided by 12. So 7, 1, 2, 3, 1, 2, 3 divided by 40 multiplied by 4 divided by 12. This is total depreciation of the factory. So I can now say the carrying value of the factory cost for the factory. How much is the cost? 20 million. Depreciation of the factory. Now, so times 1, 2, 3. Use the carrying value. Hello, guys. Hello, guys.
Yes, sir.
Any question for me? Any question for me?
So are we depreciating for 4 months?
4 months, yes.
Okay. Stated in the question, right?
Yeah, because the factory was completed last day in May, and the financial year ends in September. So I will start counting June, July, August, September,
Oh,
which is 4
okay.
months. Yeah.
Got it. Financial year. Yeah.
Any question for me? Hello. Ibukun? Ibukun? I can't hear you again. No. Kemi, Ibukun, Shedrack, any question? Okay,
I'm with
Kemi
you.
is
I'm
saying
okay.
something. Eh?
I'm okay, sir.
Okay. Okay, Ibukun said you have muted me. Oh. Ah. So you can unmute yourself now.
You muted me since.
I didn't know now. Apologies.
Thank you.
Apologies. So are you fine?
Yes, I'm fine.
Are you sure?
Yes, sir.
Kemi, Akonbi. Okay. So
I'm
there is
okay.
classwork. Okay, you're also okay. Okay, there is classwork that we have to do now. This question number 3 is the classwork. Got the question? How many minutes should I give you? Yes. We come back and do it together, but I want you to make an attempt, and we come back and do it together. Eh? Yeah.
My phone, not my laptop. So
Oh, no problem. Just try and manage. Try and manage. But yeah, so how many minutes should I give you? Guys,
yeah, with you. Let's try.
no, I know you will try. So I want to find out how many minutes should I give you? So let me give you 8 minutes. I will continue to display my screen, but I will mute my device. Okay, so I want to mute my device now. So in 8 minutes time, or let's say 10 minutes time, we come and debrief what you've done. Thank you. So let me mute my device and I will go back to the question. Thanks.
I need to do this.
Hello. Hope it's going on well. Are we almost done? Hello. Kemi. Oh. Hello.
Sir.
Jaffa. Hello. Shadrach. Famous.
Yes, sir.
Are we almost done? Eh? Are we almost done? Kemi, you're not responding, no. So let me give you additional 2 minutes. Please, let's make it snappy. Okay. Can anybody tell me what he or she has done? Mr. Bello, Kemi. Can anybody come and explain what he or she has done? Hello, are we there? Hello. 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 Anybody hear me?
You muted me. Oh.
Shedrack, can you talk now?
I'm with you. Like I told you, I want you to do that thing again. And this is my first time I'm attending this class.
No problem. I've
So,
solved a question like that before you join. That was why I wanted people that were in class to make an attempt. I will still solve it. I will still solve it. I
okay,
just wanted
thank you.
them to make an attempt. Yeah, I will still solve it. Don't worry.
Thank you.
Bello and Kemi, are we still here? I can't hear Kemi. Oh. Bello. Bello. So let me copy the question. Bello and Kemi. Kemi.
Unmute her.
No, she can easily unmute herself, but she can unmute herself. Probably she's not. Okay, no problem. Let's move ahead. I don't know. Can you read this question so that we can solve it together? Can you read this for us now?
Mean me?
Yes. Yeah, only 1 year now.
Okay. Say on 1st April 2010, Epsilon began to extract minerals from a large site that it had recently constructed. The direct cost of constructing the site totaled $25 million. The directors of Epsilon estimate that an appropriate allocation of general administrative costs to this project will be $2.5 million. The site has an expected useful economic life of 10 years, and at the end of that period, the cost of rectifying the damages to the environment caused by the construction of the site is estimated as $6 million. Epsilon is under no legal obligation to rectify this damage, but Its published policies indicate that rectification is its usual practice in such circumstances. Your assistant has included $27.5 million in property, plant, and equipment, and charged $2.75 million depreciation in the income statement. He has not included any provisions for the cost of rectifying the environmental damage because Epsilon has no legal obligation to rectify it and could therefore choose not to. The relevant discount rate to be used in any calculation is 8% per annum, and the present value of $1 receivable at the end of 10 years at the rate of 46.32 cents required. Explain and show where possible by quantifying amount how this event will be accounted for in the financial statement of Epsilon.
Okay. Thank you so much. Can you can you summarize what you've read? Is it possible?
Now, Epsilon have a construction site that started in 1st April and was given 10 years to make use of the site before working on the depreciation.
Come again. Can you come again, sir?
Okay. Epsilon had a construction site that they commenced construction on 1st of April 2010. And they have 10 years to work work on the rectification, though by their policy, they are not obligated to do it. Then the initial, I'm not even seeing that the figure. Okay, the initial amount of the construction site was $25 million. The administrative cost of the directors is $2.5 million. Then the rectifying obligation, by law, they are not obligated, but by policy, they usually do that. And they do it at, it is proposed to be done at, I think, $2.75 million. At $1.
So you said by law, they are not obliged to do it. So
by
does
law,
that mean okay?
But by law, they are not obliged, but by practice, by policy of the organization, they do it. That's from the
So what does that mean? Should they do it or they should not do it for accounting purpose?
For accounting purpose, they should do it.
Why?
Because they have in the course of the construction, equipment might have been depreciated, and then there have been a depreciation cost in the course of the operation on the construction site.
Okay, so we can move ahead.
I stand to be corrected.
Okay, no, not correct, but don't worry, I will do the correction.
Okay.
Okay. So is it correct to have included a 2.5 as part of the 25 million? Is it correct?
Let me hear you again. You say what?
Is it correct to have included 2.5 as
As
part of the
administrative
25?
as
Is it
administrative
correct?
cost.
Yeah, to have added it to the 25. Is it correct?
In my view, I don't think so. I don't think it's correct because I look at that 25 million as cost of construction per se and installation
Okay.
of equipment. Then the
Mm-hmm.
administrative cost may come after because only after the installation that they can talk about management or administrative operations.
What he has done here, what they've done here is to have capitalized the 22.5 as part of the cost of the asset. My question is it correct to have done that?
For them to have put 25 million as cost of the assets?
No. What they've done here is
Yes.
that 2.5 has been capitalized. It has been capitalized as part of the cost of the asset. I'm asking, is it correct to have done that?
No, if you talk about if you talk about cost of production, let me use that word. If you talk about cost of production,
No, it's not production. No, wait. It's not production here.
this
It's
is a
not production.
construction now.
This is a mining. This is a mining.
Thank you. A mining site.
Yeah. The cost of constructing that mining site is 25 million.
Yes.
I'm now asking, okay, let me now ask you this question. What do you think is the total cost of the construction of the mining? 25 or 25 plus 2.75? Which one?
25.
Okay. Why is 2.75 not added to it?
Because I believe that 2.75 is cost of operation, which is not supposed to be, it's not fixed in nature.
Okay, can you explain what you mean by it's not fixed?
Yes, it's not fixed because it's the cost of operation. It's not part of the cost of installation because the first one talk about fixed assets. Let me use that word. You understand? And the second cost, 2.5, talk about the administrative cost. That's the operation cost and let me use management cost. Let me use that word. So it varies, and it can never be exactly as the cost of the fixed asset.
No, don't worry, I will explain. This 6
Explain.
million the question. Don't worry, I will explain shortly now. This 6 million the question. What does it relate to? What do you think it's related to?
The 6 million is for rectifying of the damage.
And so what does that mean?
That is what do I call it? How will I call it? It's building cost of depreciation into it.
Say what?
It is building part cost of the environmental depression, that is damage, into the cost of installation or cost of operation. Let me use that word, cost of operation, because one, from what I'm seeing here, is say the site has an expected useful economic life of 10 years, and at the end of that period, the cost of rectifying the damage to the environment caused by the construction of the site is estimated at $6 million. So I see the $6 million as depreciation cost.
Oh, no. Don't worry, let me not explain now.
Explain, sir.
I don't know whether Kemi is back now. Kemi and Bello, are we here now? Okay, so look at my screen.
Okay.
IAS 16 requires that the cost of an asset should include only directly attributable costs. Only directly attributable cost of bringing an asset to its present location and condition. To stop. The standard specifically prohibits recognition of allocated general administrative costs to be capitalized as part of the cost and assets. Therefore, it is incorrect to have capitalized 2.5, is it 2.5? Yeah, to have capitalized 2.5 as part of the cost of the mining site. To stop. The cost of the mining site should have been $25 million, which implies that the annual depreciation of the mining site should be 2.5 million, which is 25 million divided by 10 years. Hello,
I'm with you.
are you fine?
I'm with you. Go ahead. I'm with you.
No,
But
I
I
want to know
need
whether the first paragraph, whether you
I would
understand
like to
before I
have
move
a,
on. You said
go
what?
ahead. After this class, I'll have to like a personal discussion or chat with you on this because there are a lot of things I need to come to knowledge of. Go ahead.
Okay. So which should be recognized in the profit or loss as expense. Stop. The carrying value will have been 32.5 million. which is 25 million minus 2.5 million. IAS 37 requires an entity to recognize a provision for environmental contamination cost whenever there is either a constructive or a contractual arrangement. In this case, epsilon is having a constructive obligation, and as such, provision for environmental contamination is required to stop. For the purpose of doing this, the standard requires an entity requires that the provision should consider time value of money, to consider time value of money, and as such, discounting is appropriate. Stop. $6,046,32 times 46.32 divided by 100. Okay. The present value of 2.7792 should be recognized in the profit or loss as expense. Stop. The unwinding of interest or this one multiplied by 0.08 0.08, which is 6 million times 46.32.
The unwinding of interest of 0.22, which is 2.772 times 8% will be recognized as finance costs in the profit or loss. The carrying value of the provision becomes this guy plus this guy becomes $3 million, which is 2.779 plus 0.22, which is to be presented as a non-current liability. The summary or the financial statement is shown below. Profit or loss, finance cost 0.22, depreciation 2.5, general administrative costs. That's right. Statement of financial position, PPE, which is a mining assets, that is 22.5. Provision. Hello,
I'm with you.
do you have any question for me?
The question, how do you come to 0.22, then depreciation 2.5? You worked it out or somewhere?
Yeah, they are here. Let me. 2.5 is 25 divided by 10. I don't know if you can see
Okay.
that.
Okay.
And 0.22 is 2.772 times 8%. They are here.
Okay.
Any question?
Scroll, the scroll down. Let me see where you are.
Okay.
Okay, say provision, mining asset 2, provision 3. That's how you stop. The first profit and loss, I've understood it. Finance cost 0.2, provision 2.5, that receiving cost 2.5.
Yeah. Any question? Is it fine?
It's okay to buy like what I told you, eh? After this class, I don't know. Are you on the platform? That WhatsApp platform, is your number there?
Not yet, but you can drop your question on the group chat, and whichever question you have, I'm sure somebody is readily available
Like
to.
now, let me tell you my. I just want to. I read economics. I don't major in accounting. I read economics. Are you hearing me?
Yeah, I'm listening.
But then I know that I did some final accounts. I've done some accounting programs that are not degree program per se, but I have economics degree. But I want to divert into accounting and want to see if I can have this um, professional position qualification in accounting, like these ICAN issues. So I need somebody that can put me through. Are you hearing me?
I'm listening to you.
So that is why I said I need a private or personal discussion with you on how I can go through this, at least in a period of, I don't know when the exams always takes place. I want to know the processes. I want to know, have all the resources that can help me do the exams either next year, if not if this year is rounding up, either next year.
Okay, no problem. So you can just drop a message. I think admin will respond. Well, currently, I'm not on the group chat, but no problem. Just drop a message. I will do a follow-up, and we're going to provide all necessary information you need.
So, okay, what I needed is probably a private chat the admin. I don't want to just throw it on the platform.
Okay, okay, yeah, you can private chat admin. Yes, no problem. That's fine. That's
Thank
fine.
you so much. Thank you.
I really appreciate that. Okay, Bello, we can't hear you again. Oh, you disappeared.
Thank you. I think you have revived my resident
Yeah, no
knowledge.
problem.
It has been a while I left the classroom.
I'm very sorry about
Yeah.
that. I had to attend to one urgent issue, so sorry.
Okay, I don't know. I don't know whether you attempted the question before you.
Not. I didn't finish it. I just read the question and I'm trying to narrate the solution to it before.
Okay, we've actually solved the question. Let me go back to the solution. I'm coming. Okay, this is solution. I don't know whether I can give you like 5 minutes to take a look at it. Bello, are you still there? Hello? Hello? Can anybody hear me?
I'm hearing you. I'm with you here.
Oh, I think Bello disappeared again.
It seems that it's not yet true with what is doing.
Yeah, yeah, yeah.
So Saeed,
Yes, boss.
please, I trust that you assist in helping me through. I want to divert into accounting. Let me chatter in accounting, but I know that it's not a rocket science. I believe that it's not a
Yeah,
rocket science.
no
So
problem.
that's, if possible, I would like to have your direct contact.
We are here for you, no problem.
Thank you. I'm grateful. I'm grateful. Thank you.
No problem. No problem.
Welcome.
Okay, so have you written any exam before now for this
I mean
paper?
the professional exams in accounting?
Yeah, I mean this ACC. Have you written anyone before?
No, I have not.
Okay. Coming. So based on what we've done, okay, I think you joined the class late. The material
Yeah.
will be shared. The material will be shared on the group as well. So you can get in touch with us if you have any question or clarification to make. I don't know whether that is fine by you. So this is the material that we use. So I'll be sending the material, the exam that we use, and also the question that we solved. I will drop them on the group chat. So in case you have any clarification or question, you can get in touch with us. Can you hear me, Mr. Shedrick? Hello? Are you there, sir? Hello? Hello? Are you there?
Hello, Candy.
Yes, I'm here, I'm here, I'm here.
So, like we said, if there's any way, we can put me through or guide me through, I don't know how many stages I'm supposed to write. I just want to I want to know and the implications. I want to just take it as a task.
No problem, no problem, no problem.
Thank you.
That's not, yeah, that's not it. So I'll be dropping the material we use for today's class, both the
Okay.
PowerPoint, the question, and the exam, which contains the solution. I will
On
drop
the
them on the
platform.
chat. Yeah, on the platform, yes.
Okay. What I will do now on the question side, on the chat side, I'll drop my number.
No problem, sir.
Thank you. I remain grateful.
Thank you so much. So see you next week
I
for
will.
another
I
class.
think
Thank you.
I have to follow up.
Yeah, thank you so much. Thank
Thank
you.
you. Thank you.
Bye
I'm
bye.
grateful. Thank
Yeah.
you.